Hi everybody, Alex Deploy here from Expert Forex, and welcome to this video on grid trading made simple. Now this video is one in a series, and it is very important that you watch this first video that was made, Grid Trading Explained, because what it does, it explains why buying and selling at the same time makes money. You need to understand how that works, and it also explains the multiplier effect, where the same transactions get repeated over and over again, multiplying your gains over and over again. Now, a link to this video will be in the description of the video as well as in the first commentary of the video. Now, during this video, you will see lots of references to the grid trend multiplier. It is basically an automation of grid trading, and a link to this trading robot will be available in the description of the video as well as in the first commentary of the video. In this video, we're going to be looking at the two major strategies for making lots of money when using the grid trend multiplier. So there are two main strategies used by all grid trend multiplier traders. And the first one is the buy and sell strategy. That is the strategy where you enter a buy and a sell into the grid system, and every time the price touches a grid level, it will buy and sell continuously on an ongoing basis and cash in the positive ones and let the negatives run, and so on. Then you have the single direction strategy. That is where the trader is pretty confident about the direction that the currency will be moving, and therefore only trades in that single direction. So we're going to be looking at these strategies from a point of view of what are the risks involved in them, what trading skills do you need to use those strategies, and what are the rewards involved. So let's have a look at the buy and sells strategy first. Now, when you enter a deal in Forex, there are a couple of things that can happen. Firstly, the price can go sideways, like shown in the black there, or it can trend very slowly in one particular direction, or it can trend very slowly in another direction. Or alternatively, it can shoot up and really trend very quickly in one direction, or trend very quickly in the other direction. So those are the main alternatives that exist in the Forex market. So when we are going for a buy and sell strategy, what we want is, we want the black price movement. We just want it to dawdle sideways, cashing in deals as it's touching each grid level, and so on. And what then happens is the multiplier effect kicks in, and it cashes in at the same level over and over again, and you actually can achieve tremendous results. And we'll look at some practical examples. You can actually experience tremendous results if that happens. So your rewards can be quite big. Now the problem is, what if you get this wrong? What will happen? Now let's look at the first level of getting it wrong. So suddenly you enter the deal and the market stops trending upwards. Now, because you're in a buy and a sell, you're still cashing in deals positively, and there are small retracements within in a slow trend. So you're cashing in buys and sells all the time as you're moving up. You are just not cashing as many sells as you are cashing in buys. And by the time you reach here, there'll be a lot of open sell transactions, but you will have the advantage of all the cashed in sells and all the cashed in buys when you reach there. And here I'm assuming that you are risking 10% of your account on this particular strategy. You never risk your whole account on grid trend multiplier trader. You actually pre-calculate these figures before the time, and you say, I'm going to risk 10%, and that is shown in previous videos, so I'm not going to show you about that. But and again, what I'm using is price levels. So I'm saying if it reaches that price level, or it reaches that price level. So when it reaches that price level and you have risked, let's say 10% of your account, because of the multiplier effect of cashing in on the way, you won't have a 10% loss. You'll most probably have a 5% loss. In fact, I've got a plus minus there. You could, and it is shown in some of those previous videos, that you could actually be profitable by the time you reach there. It depends how long the price takes to reach that particular point. You can actually make profits trading the wrong way. Now the same applies to the slow movement downwards. Exactly the same logic applies, and you can make a loss of, let's say, 5% of your account. And there are very strict settings in the grid trend multiplier that will just stop the trading and close all the deals when a certain level is reached. So there's your risk. Your risk is that you could most probably lose 5%, but you can actually gain a lot more if it goes in your favor. Now, the biggest thing here is you don't want it to shoot up or shoot down, because what happens if it shoots up very quickly or shoots down very quickly? The multiplier doesn't work. So as you can see by these red blocks, there's no overlap of these red blocks. They just shoot straight up, and you can lose 5 to 8% of your, there will still be some overlapping there, but you could lose 5 to 8% of your account if that happens. And if you're trading sideways, whether it goes up or down really doesn't matter. So what we're saying is, if you look at the odds overall, is if the currency starts trending very strongly, you're going to lose 5 to 8% of your account. If it starts trending very slowly, you could break even or have a small loss. Either way, but if it goes sideways, you can make a lot of money. So this is a lot of people look at this and say, oh, I'm going to blow my account if the market starts trending. Look, if you blow your account, you've only got yourself to blame, because you should be restricting your losses to 5 to 10% of your account. So what will happen when the price gets there, all deals will be closed and you won't be in danger of incurring any further losses. So let's have a look at the dangers. So the dangers are strong trends, as I've said. You can survive slow trends that go against you. You can make money in sideways markets, and you can make a lot of money in a sideways market like that if you're trading buy and sell strategies. And risk can be limited. As I said, you don't risk your whole account, you risk 5% or 10% of your account. So what skills do you need to trade this way? Well, you need to identify sideways currencies. So you need to go and find low volatility currency, and this has all been covered in previous videos too. You find low volatility currencies that don't move much, and you say, okay, I'm happy with a range of, let's say, 150 pips, and I'll trade within that range and I'll make my money that way. So you go and find one. Or you are lucky enough to enter when the currency goes into a sideways phase. So that's the skills that are involved. Now this will explain why grid trading is very simple. All you have to do is select the correct currency and the correct grid size. And this tool, which we call the Trend Analyzer, which is a free tool, you can download it from a link in the description and in the first comment of the video, can be used to determine the best currencies to trade. Now, what you've seen before is that the grid trend multiplier makes most of its money when the market goes sideways. So it makes sense to trade currencies that trade sideways with low volatility to reduce the risk of trends. So in this example, you've got the euro pound, which has an average buy trend of 27 pips, average sell trend of 25 pips, and then the longest trend that it records is 44 pips. So it actually trades sideways, that particular one. And the other ones just below it are also pretty sideways currencies. So those are the ones you would select for grid trading. Then you look at the bottom here, you've got the pound yen, which has an average trend of almost 200 pips, and then 270 pips for the sells, and then the longest trend was almost 700 pips. So that is a dangerous currency to trade the grid trend multiplier on. But you can turn it into a sideways currency too. Now let me show you how you do that. So for the euro pound, which is not likely to create big trends, the longest trend was 44 pips. So you could use a gap size of about 10 to 15 pips. So you divide that by 4 or you divide it by 3, and that will be fine. Now, that is very aggressive and that is more conservative. So the 10 is more aggressive and the 15 is more conservative. That's a general guide on how you can create grid sizes. Now, the pound yen is more likely to create big trends. So there's two strategies to use there. You can either avoid it completely because it's dangerous, or you can just use huge, big gap sizes. So the longest trend is roughly 700. So if you divide that by 3 or 4, you get a gap of 170 pips if you want to be aggressive, and 230 pips if you want to be conservative. So there you've turned this dangerous pound yen into a sideways currency because you've adapted the gap to be effectively a sideways movement. But this tool is critical for grid trading. Please go and download it. It's also critical for a lot of other strategies, so it is invaluable as a trader's tool. The other skills you need is you need to be able to lot size and work out these risks that you are exposing yourself to. So you need some mathematical skills to say, at worst, what am I going to lose? At best, what am I going to make? And if the thing dawdles sideways, what could I possibly be exposed to? So you do need some mathematical skills. You need some ability to identify currencies that are going to trade sideways, and then you've got to match the spreads and the grid sizes to give yourself the optimum income when the currency trades sideways. So that's the buy and sell strategy, and I'll just show you an example of that. And here's an example which is basically a sideways. The person actually started over here and ended over there, so it's not exactly sideways, but you can see the market essentially moves sideways, and from there to there is about a 200 pip gap. This is a 10 pip gap grid, and the person reached their profit goal of $500 at that particular point, and the EA just closed all the deals at that point. So here's one example of trading a sideways market and making quite a bit of a gain. There we are. Now if you look at the same thing happening over here, and this is now an aggressive trader. And this aggressive traders, all that they did is they risked a bit more per trade, and by the time it closed, their income was 5,000. They started with 5,000. They made 5,000 profits, so they doubled their account over that same period. And this is a period of about 2 weeks that we're looking at here. So here, there is an example of a sideways market. You can see the blues and the reds. That means it's buying and selling all the time. And there's an example. And this example is shown in previous videos again, so I'm not going to go into it any further, but there it is. So now let's look at the single direction strategy. Now in this strategy, the trader has got quite a lot of confidence that the price is going to move in a certain direction, and let's say the British exit decision was made and the market decided that the pound is going to strengthen, and that's in fact what happened. And so the trader thinks, oh, I'm going to just buy the pound into this grid. And so what the person is looking for is a slow movement up in the direction, because this trade is only buying. It's only buying, so it's only making money when the price goes back and opens new levels and cashes in and goes back and opens there. So he's looking for a slow move upwards, and you can see you can earn tremendous income if you catch a slow moving market going upwards. It's okay if the price goes in your direction, but if it goes so quickly that it doesn't have time for the multiplier effect to kick in, you will make reduced income. Reduced income because the multiplier effect. The grid trend multiplier obviously makes money when the multiplier effect is strong. So it will be strong in this particular case. Now let's say the trader got it wrong, but he didn't get it badly wrong. Instead of the price going up, it just dawdled sideways all the time. Now, as we've seen, you can make a lot of money in a sideways market, and you will make money in a sideways market if you're using a single direction method, as long as the range stays pretty tight. Now, so the trader got this one wrong, and suddenly the market started trending slowly in the opposite direction that he anticipated. Now, again, within this framework, even if you're buying, you will be cashing in deals where the price visits the same level over and over again. So instead of incurring a total loss, you will be incurring a smaller loss. And again, I must state that it is possible to make a break-even income in a market like this. Or let's say the person is risking 10% on their account, they could earn. They could have a loss, but not 10%, around about 5%. So if the price goes straight down, the person will lose what they've risked. So they will lose between 5% and 10%, depending on how often the price has revisited the same level. So, you've got to be aware of these odds, because a lot of people focus on this and they forget that you can actually break even in a slow moving market, or you could make a lot of money in a sideways market, in spite of the fact that you wanted the market to go like that. So again, you have to have skills in maths to work out your strategy so that you're only exposing yourself to, let's say, 10% of your account. Again, you also have some trading skills to say, hey, I've got enough confidence that I know that the pound is going to be going up in the next month or so. So here's the points. You make less money in strong trends if you're getting it right. So if you get a strong trend, that's actually not what you want, but you will be making money. You'll make lots of money in a slow trending market that goes in your favor. Now there's a slow moving market, and we'll see one example of that later on. You'll make money in a sideways market, so you'll definitely make money there. It won't be great, but you'll still make a nice return. You could make reduced losses in a slow trending market in an unfavorable direction. So this is going unfavorable. You could even break even or make smaller losses because of the multiplier effect working there. And in unfavorable markets that go very quickly against you, risk can be limited. So you can limit your risk to 10% of your account, or 5%, or it will most probably not hit 10% because of there will be some retracements in that particular trend. So you've got to be aware of the risks, and you've got to say, okay, what are my chances of this happening? What are the chances of that happening? What are the chances of that? What are the chances of that? And what are the chances of that? And you've got to look at it not as a single trade. You've got to look at it as 10 trades. And you say, if I trade it 10 times, what is the likelihood of this happening, that happening, that happening, and that happening? Is this going to happen to me 10 times in a row? Or is this going to happen to me once or twice? Or is this going to happen to me 3 or 4 times? Or is this going to happen to me once or twice? You've got to work out the odds, and you will see, if you do that the odds are heavily stacked in your favor because of the multiplier effect. They're just heavily stacked. And this is what I find quite frustrating about traders that can actually do quite well with the grid trend. They focus on this leg, and they think this leg's going to happen every single time that they trade. and this is avoidable if you have a rough idea of trading, and you can get a good direction going, and you get these directions also from the longer term charts, like the monthly and weekly, and those kind of charts will give you a momentum direction that will keep you safe, or at least keep you breaking even, or if it goes against you, that you in this kind of environment. So let's go and have a look at an example of this particular case. Now, here's the winner of our most recent trading competition, and the winner basically had a good idea that the pound was going to strengthen, and they bought into that particular movement, and it was cashed in there, and they started with 10,000, so they doubled their money, 10,000. Then they restarted and traded a buy over there again. At that point, the profit reached was 10,000 again, and they stopped, and then they re-entered straight away because they were so confident that the trend was strong, and they then won the competition at the top here. Now, that's an example of a trader trading one direction. You can see there's only blue entries here, bought all the way into this trend and made 324% return over 2 weeks. So this was a 2-week period. I think this is a 15-minute chart, or 15-minute chart. So over a two-week period, they made 324% return. So it just shows you that if you can get this right, you can actually have a great return. And if you get it wrong, you don't have to lose your whole account. You can put, as with any trading transaction, you can put stops in that will limit your loss on your account to, let's say, between 10 and 5% of your account. So I hope I've given you some ideas of how to use these strategies and how to view the risk and rewards that you could possibly get out of this trading. Now, if you take a basket of 10 trades, you might have 3 wipeouts. Completely, the trend went right against you. But the other ways that the market moved will save you, because your gains are disproportionate. Your gains are much higher than the losses you make when there's unfavorable moves. So you might just get mediocre gains on some of the ones, but there are going to be 2 or 3 or 4 trades that provide you with astronomical returns. Now, so don't let the risk of 1 or 2 losses put you off. It's the gains on those ones where you catch the market and it is just slowly trending in your required direction, or it's slowly trending sideways as you wanted it to, where you make really good returns. And as you've seen with that previous trader, when you've made good returns, you cash in, consolidate your account, and then start over again and just keep on going. That's my first point. Don't be greedy. Don't try and make $1 million on a $5,000 account. Don't be greedy. Trade in a very controlled way. Pre-calculate your losses that you might be exposed to. Pre-calculate as much as you can, and have a fixed period, a time that you're going to be cashing in your gains. So don't be greedy, just cash them in, consolidate. If you've made $10,000 on a $10,000 account, then that's the best time to just cash in. Withdraw your money out of that account, your $10,000. You're still left with $10,000, and then just continue trading. So you've got a risk-free account. So please don't be greedy. The biggest downfall about the grid trend multiplier is when traders get. Then the second point is understand the odds and the risks and the rewards. All of this is you can calculate this in advance. So nothing needs to be a surprise. You say, oh, the thing's gone against me, or oh, look at it, it's going sideways just as I wanted it to, and you know more or less what you're going to be gaining, and you know more or less what you're going to be losing. So you need to be competent at maths to work out the odds, the risks, and the rewards. Simple as that. You need to be good at grid sizing. There's a risk reward thing in the grid size. Sometimes your bigger grids reduce your risk, but they also reduce your income. Smaller grids increase your risk, but they also increase your income. So you have to get that balance right. You also have to be clever at currency selection. You've got to select, if you're using the single direction method, then you have to find a currency that you're pretty confident will be trading in a certain way. If you're not, then you've got to find a currency that traditionally trades sideways, and you use that. You must be very good at risk management, and risk management also entails lot sizing. So you have to lot size your trading in such a way that you don't expose yourself to excessive risk, but at the same time you expose yourself to really good gains. And then you've got to select the strategy. You've got to decide, are you going to be a single direction trader, or are you going to be a buy and sell strategy trader? And then the last one, number 7 by some fluke, is last success factor is you need luck. That is why you mustn't expect 100% success rate. You have to allow 3 or 4 of those things to go bad, and you need to make sure that the ones that don't go bad really make up for the ones that have gone bad. Because you could do all your analysis, you can identify a currency, you enter the currency, and on the day something that happens and that currency just flies out the window and that particular deal goes bad. So you do need luck in forex trading, but what you can do is, with a lot of work, with a lot of analysis, you can factor the luck element to a minimal amount. Now, as I mentioned, this video is just one in a series. There are a couple more to come out on things like currency selection and that type of thing. So please watch out for future videos on the grid trend multiplier. And I hope you've enjoyed this video. From me, Alex du Plooy, cheerio.